Hi there, a very good morning and good afternoon to all of you, depending on wherever you are watching me and hearing me. This simply Stocks, and I'm live with another live session with you all. And in this live session, I would like to talk to you about two or three learnings that has come out with uh, watching Mr. Rakesh Jhunjhunwala over the years and how he has performed his trades and investment strategies. And probably these types of learnings would come out with any big investor that has gone through the ups and downs of investing over the last 15 20 years or so, whether you take Ramdev Agarwal or anyone else. And this is extremely important because we as retail investors might have doubts in our mind whenever we take positions. But over a period of time, we'll understand. If you are new to the market, you would end up understanding over 10 years that why that was extremely important. So, Ashim, hello to you. Sheikh Saifuddin, walaikum salam to you. And I hope more people join in as it's a Sunday afternoon. So, this session will belong to talking about these learnings, will answer your queries, a little bit of talk about the markets, which look pretty strong, especially with FII buying probably in a day on Friday when the markets fell. That's extremely positive. Namaste, Vishal. Baljit, hello. Buchi Babu, thanks for all your support. Hello. Hi to you. So basically, as far as the markets are concerned, I'm going to talk about the markets in a bit. Just a little bit of talk about the global sports events because we have been following sports as well altogether. So after the Commonwealth Games, it has been a lull phase altogether till now, but India has done well in cricket in Zimbabwe up till now, although they had a little bit of hiccup in the last one day international. But tomorrow they play the third one, and then we have the Asia Cup. So the big match on Sunday against Pakistan. I hope India does well there, and hopefully they'll continue with the aggressive fashion they are showing in terms of their batting, which they are doing. And so it's going to be interesting to see how Sunday pans out. Shahin Shah Afridi is not that well, may miss out on the match, so that's a positive for India as well, which is unfortunate, but that's how cricket is. So, looking forward to that event, looking forward to the whole Asia Cup and then the World T20 in October. So, big events coming up, the US Open in the latter half of August as well, the Davis Cup tie in, I think it is in September or so. Uh, so, now talking about the markets as such. One thing about the market is that it has gone up a lot from that 15,200 levels. It has gone up by around 20% over the last probably 3 months or so, just 2 3 months phase. And so there would always be a correction, and that is exactly what has happened. Now, where would this correction stop? That's the basic question. So with FIIs buying on Friday, which is pretty positive, I think we could be looking at something like 17,500 as a level, which could be looked at uh, as a support level. So I think 17,500 and then 17,000 levels are pretty good to hold, and probably mid caps would end up doing well rather than large caps. That's my assessment for the next 1.5 years or so. So there could be some decline over the next 3 4 days in the market, but then we could be in for a good move. So Baljit, your question, one expert on YouTube is saying that FIIs have bought in cash on Friday but have sold almost three times this amount in futures. Is this true? So I have not looked at the futures data that well. That might be true, so that they can hedge positions. So probably they might say that if the markets fall going forward, then you'd be in a situation where they would be able to hedge positions altogether. Uh, that's perhaps the thing. But in cash, if they have bought into the market, that's a pretty positive sign. And I believe that probably from Tuesday or Wednesday onwards, we'll see a consistent move, upward move in the market, and from October onwards, we'll definitely see that. So I'm fully invested at the moment in the market, and have told that to the members as well, and so they know about it. I'll put up the portfolio probably by today afternoon, evening, uh, with all the prices. I believe this market could be headed much higher than what we all expect. Yes, I have changed my stance from about 2 weeks back, but purely on the basis of the data that is being seen. At that point of time when we were at 16,000, 16,500, it looked like that the rally could be weak and we could go down. But at this point of time, it looks like that with FIIs coming back with a vengeance, this trend could continue, because they have bought something like 3,000, something in the region of 3 to 5,000 crores, whereas they have sold a lot. So I think they have bought something like 10,000 crores up till now, and they have sold something like 2 lakh crore. So there's a lot to go, and I think over a period of time, we'll see a lot of traction in the market. Yes, there will be some up and down movement. There could be short-term corrections, but we could be in for a big move by 2023, mid 2023, especially in the mid and small cap stocks, which have moved already. But this is just the beginning of a big move in this section of the market. Now, coming to probably the three most important teachings from, you can say, the father of all investors. I wanted to talk about it all the time. So this time around, I'm putting this forward. This is something that we all know, but it's extremely hard to practice. And I'm trying that. I hope you also are able to do that, and you're able to do that with having the resources for doing that as well. Because in order to practice these three aspects of investment, you really need to have the money for that. So you really need to have the funds in order to keep you afloat in that overall period. So three things is basically vision to see, courage to buy, and then patience to hold. These are the three most important aspects of investments that one should look at in order to make big amount of money, and that is what Sir Rakesh Jhunjhunwala always had. And we saw that he held on to his positions for at least 8 to 10 years, and that's how he was able to make big money in Titan and Lupin, and lose a lot of money also in his some of his positions. So overall speaking, I would say that if you really have the vision to see which companies or sector is going to end up doing pretty well, we could be in a situation, or you could be in a situation of making big money only when you hold on to those positions over a period of time, over a period of say 5 to 10 years at least, if not 20 to 30 years. So probably what you can do is uh, you analyze companies on that aspects of 5 to 10 years, build positions on them big time. So that is the courage to buy big and hold on to it. And the third one is patience to hold. So you should have the patience to hold and the funds to hold them. So if you're doing some job, you should be ready to do that job over a 10-12 year period and make money from it and make ends meet, so that your investments go big. And over that 10-12 year period, you will see your investment eventually performing well. So if you falter on any of these aspects, so many people, what they do is they buy the best of the companies and they put in the money, but either the stock goes down 20% over 1 year, then they get panicked and sell. Or if the stock goes up 50-60%, say in a year or 18 months, they think that okay, they have made enough money, and so making 60% say on a big position is pretty good, rather than holding on to that stock over a 10-15 year period and seeing it go up say 6,000% or 10,000%. And stocks have gone up like that. So it's really a combination of all these three aspects which is going to make you money. You might have the right vision to see as to which sector is going to do well. Secondly, you might have the right vision to look at a stock which gives you the vibe that okay, it is trading at reasonable valuation, and over a 10-year period is going to consistently grow or compound its profits 20-22%. And then you end up also buying into the stock. So either you'll buy a little bit of that and eventually have the appreciation that you envisaged, but since your investment was less, you'll not be able to make the money. Or you're put in the big money and then you saw your probably profits go up big time over a 12 to 18 month period, and then you take that profits off thinking that okay, you made enough money already. And then if it has gone up say 60% or 100% in a year, can it go up 6,000% over that period? You might not think and sell. Or if you go down 30% on your stock position, then you might believe that this is not the stock to hold and we'll look at something else, and you book loss, and eventually the stock do go up 6,000% or 60 times and all those things. So you would really have to have all the combination together to make big money. Yes, in that phase you'll end up losing a lot as well. If you have bought into say 10 positions, 5 might do extremely well over that 15-year period, and 2 might absolutely turn out to be duds and you'll end up losing 80% of your money, and 3 might give you a reasonable return but not big. But that's how market is. That's why the diversification part kicks in, and that's where you have to really not buy one or two companies but look at least 5 6 if not 10 probably scripts to invest into, or 10 companies from different sectors to invest into, so that even if you are right 50% of the time, you should make huge money, and the rest 50% might make you very less money or make you losses. It won't affect you. So that is basically the crux of investment put together in these three aspects of investment that one should follow. All right, so now I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. All right. Absolutely, absolutely, Mr. Ravi. He's a rare breed of bull, but not the rarest. There are a lot of individuals who practice that and make money. There are a number of individuals whom we don't know about because their investment is less, but they end up making 60, 70, 100 times. And because their initial investment is less, eventually they don't make that much amount of money, but they are happy with their life with whatever they are making. So what I'm trying to say here is that you need to practice not only what large investors or big investors buy, but actually practice what they do in terms of the whole strategy of buying and selling a stock, and then you'll end up making money. So Baljit, Kilpest at 500, probably hold on. I have Kilpest at a lesser level, but I am in losses as well and holding on. I think he, the management is doing things, and things are moving, albeit slowly. If you have a 2 3 year time horizon, this should end up doing well. Yes, so Srinivas, a very interesting question. I think tube investment is a buy at these levels. If you can get it at 2100, that's best. But if your time horizon is more than 2 years, 3 years, this may end up being a doubler over that period. So yes, that is a buy, of course. Is VIP good buy at current levels? I don't think so. I think the big move in VIP is already done and dusted. Probably if you get a decline towards 500, then it's a good level to buy into. Yes, over. See, basically VIP's best quarter is the summer season till June, and that is exactly what has turned out to be. I think October to December will not be that good simply because of the fact that the schools would open up and the movement will not be that great. But I think if you can accumulate the stock over a 6 month period, then it's a buy, and hold over 18 months, then yes, definitely it's a buy at these levels. So campus, I am not tracking, so I won't be able to comment, Naresh, on that. I would say avoid Aegis Logistic. Probably look at consumer-centric, debt-free companies rather than stocks into the logistic domain. Yes, it could prop up 10-15%, but from a 6 months to 1 year perspective, it's a decent sector to look at, which is more consumer oriented. So Sobha short term look good, but I won't delve into, you can say, real estate stocks from a long term point of view. So short term, from a 6 months point of view, you can get 20-25% on a Sobha developers. So Deepak Nitrite also look attractive here, but you need to really analyze as to how the numbers would pan out. I have not looked at the stock in that detail. Technically speaking, it looks good around 2000 2100 levels. So NTPC shoe, I would say it's a very good buy if you have, if you're buying it in terms of you can say generating wealth through dividends, etc., and you really have a long term point of view. Otherwise, I won't suggest buying into it. The yield, uh, the profit, you can say growth in terms of a stock price will remain between 10-15% in here. DMart around 4200, if you get it, it's a decent level to buy at. It can go to 5500 also. Looks very decent, and over the 6 months period can perform. So any dips towards 4200 is a buy on DMart. Okay. So, Buchi Babu, Dawat, I won't suggest you go that you can say lower in terms of the market cap. Probably look at companies which are more than 10,000, 20,000 crores and invest into it. There are a number of companies that have declined from their January highs or last year October highs, and larger companies probably to look at in order to generate a return safely. So that's what I would say. Yes, Titan is very good for long term. I think these levels are very attractive. I think going forward, numbers will only improve with the pandemic away. So Titan is a buy at these levels from any time frame between 3 years plus. So LTI is also a long term buy, another of your good mid cap IT companies, but again, not a short term trade, but a long term buy from a 2 to 3 years perspective. That's what I'll say. Another thing I want to say here is that in the second phase of the run after this correction, I don't think that everything will move up. We have seen even Suzlons of the world and all these kind of stocks, GMR, etc., have moved up in the first phase, as we have seen. I think in the second phase, there will be some segregation by the market, and top quality mid caps will perform. So kindly take that on note, and that is why I'm stressing on the fact that to buy, if you have to buy into mid cap companies with the market around 17 and a half thousand and not at 15,000, you have to buy the best in the business, larger companies, more, at least more than 10,000 crore market cap. So Amy Organics, I have not looked at that in detail, Supriyo, so won't be able to comment on it. I think Newgen Software, IT is going through a very difficult phase. If you have Newgen, if it gives you an up move, probably exit. And if you really want to buy something in IT, TCS, LTI, Tata Elxsi on declines to 8,000, 8,500. Those are companies to really look at. KPIT on declines to 530. A disclaimer: I have the stock in my portfolio, so that's a disclaimer. I think Carborundum is one of the top class auto ancillary companies, Nagraju. So it's a buy from a long term point of view. Again, it has run up in recent times. So probably if you want to buy as a trade, then wait for a 5 to 7% dip. Otherwise, you can start accumulating Carborundum as well. Okay. LTTS is also decent, just like LTI, but the thing is, it has the valuation is slightly expensive compared to LTI. So what I would suggest is that any dip you get, then you accumulate. If you have the stock, hold on to the stock. It's a decent stock to hold from a 2 years perspective. A previous Dentro Javed, there are issues with the company. I have talked about it. You're a member as well on Patreon, so you know about it. So I won't be able to comment more on it. On the numbers front, like the results front, it has done well. So if you look at purely results, it's a buy. But there are other issues with the company. Frontier Springs, I've talked long and hard earlier about it. There is issue of salary of the management and other things, and that's why I have stopped recommending this or telling about it in my videos up till now. So you can take your call on it. Ravi, thanks for your contribution. Yes, I think Titan is good for long term. I don't think it's very expensive. Probably you can start accumulating on every 5-7% dip. Whenever the dip comes in, you can keep on adding a Titan. It's a 8, 10, 15 year story, not something to just buy and probably sell after 3 to 4 months. So that's the call. So Tata Consumer around 750, 740 is a buy. Probably another 5% decline. You should be in Tata Consumer. Looks attractive at those levels. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post. Kindly support me on Patreon. Thanks a lot for watching.